Royal Mint is probably most famous for making coins. And we actually also extract precious metals from e-waste, so the printed circuit boards that are in phones and laptops, and we make jewellery.
What's your thoughts in the drivers behind the gold prices?
Lots of things that have been in the news that have driven gold. So tariffs was probably an obvious one earlier in the year. Gold has always performed that role for thousands of years as a safe haven.
I think the Royal Mint needs a new ETF. I think it needs platinum, silver and gold all in a bundle ETF. That's what it needs.
If we look at the last 4 quarters, in terms of sales on our website, we had 3 consecutive record quarters for gold coin demand. So we've never seen anything like this in terms of demand. And I think there's a number of things going on there. One is obviously...
Okay, welcome back everybody to the Wise Wealth podcast. It's so good to be back. It's been a busy time and lots has been going on in the markets, as I'm sure you're all aware. I've got a very exciting guest on the podcast today. I'm not going to do an introduction. I'm going to let Stuart introduce himself. So over to you, Stuart. If you can give us an intro into who you are and what your background is, that'd be amazing.
Yeah, thank you. And thanks for having us on the podcast. My name's Stuart O'Reilly. I'm the Market Insights Manager at the Royal Mint. The Royal Mint is probably most famous for making coins. But I'm sure you've noticed that fewer and fewer people are using coins lately. And so actually we've been on a bit of a journey of transformation over the past 10 years, and that's kind of accelerated in the past couple of years. And while we still do make circulating coins, the bulk of our business now is actually in commemorative coins, but also in bullion coins and bullion bars for investment purposes. And we actually also extract precious metals from e-waste, so the printed circuit boards that are in phones and laptops, and we make jewelry out of that. So we have a jewelry shop in Burlington Arcade. It's called 886 by the Royal Mint, and that 886 is actually an allusion to the Royal Mint's founding year. So as an organization, we started in the reign of Alfred the Great in the year 886 when he was pushing back the Viking invasion of Britain. So we've got this incredible 1100-year history, and right throughout that time, right from the very first coin we struck, which was a silver penny, we've been working with precious metals. So we thought, we'd use that expertise about 10 years ago to set up a bullion investment website selling bars and coins. And then today we have a much wider offering. So we still sell bars and coins. We have a Digi Gold product, which allows you to invest in slivers of metal, large bars that most people otherwise wouldn't be able to afford in a kind of relatively low price point. And we also have a product on the London Stock Exchange as well, a gold-backed ETF.
Amazing. So you've got a gold-backed ETF, and I suppose is that listed on stuff like Hargreaves Lansdown and places like that?
Yeah, absolutely. So in the normal place where you'd buy your other stocks and shares, you'll tend to find our product there. And that's the Royal Mint's responsibly sourced physical gold ETC. So it's a bit of a mouthful in terms of the full title, but I think it does what it says on the tin, really, which is important. And it goes by the ticker RMAU. So that's the
RMAU. I'll have a look at that.
RM for Royal Mint and AU for gold.
I'll have a look at that. RMAU. Okay, fine. And so is the Royal Mint sat on lots of gold bars at the moment? Do you do storage or anything like that?
Yeah, absolutely. And increasingly that pile of gold that's sat in our vault is growing. And not just gold, we've also got silver and platinum. And we store predominantly on behalf of private investors. So if you were to buy bars or coins from the Royal Mint, you could opt to store them in our vault. But also, obviously, can
I buy a bar and can I come and visit the vault or not?
You can't visit it. It's one of the most secure sites, I think, in the UK. It was built in the kind of the height of the Cold War. It's a brutalist kind of architectural site in South Wales. Very secure, as I say. And actually, most people on site don't know which building the vault is in, let alone how to get into the vault. So we
Wow.
combine kind of state of the art kind of technology with some pretty strong basics of
It would have
security as
been
well.
amazing to do the podcast in the vault, wouldn't it?
It would, yeah.
Have you been yourself?
I actually haven't. No.
No. Oh,
No.
come on. They gotta get you. They gotta get you a day pass at least, eh?
But look,
Um,
there are members of our board, for example, who
okay.
have asked to have a look and have not been allowed in. Some of
Wow.
them have, some of them haven't. So it is super secure, and it is the people who go in the vault. There has to be a very very good reason that you go in there, and normally that is because you are taking metal in or out of it.
Yeah, not a podcast then,
No.
eh? So what's the relation why is it called Royal Mint? Obviously, you give us a little touch point, but can you sort of elaborate on it a little bit more?
Yeah, so we were part of the kind of state, run from the Tower of London for many years, which is obviously a royal palace, and we've been striking coins for British kings and queens, every British king and queen, since Alfred the Great. So we've always had that connection to royalty, and in fact, all UK coins that are produced today have to be personally signed off by the king himself. So any new coin designs, he will have signed that off in a Privy Council meeting. And while we're not directly owned by the monarch today, as we might have been previously, we are directly owned by His Majesty's Treasury. So the Chancellor of the Exchequer, so Rachel Reeves, is the master of the mint. So the Treasury still has that role.
Okay, and I suppose what sort of demand from the Royal Mint are you seeing in gold, and I suppose just talking high level around the gold market, what's your sort of opinion?
Well, if we look at the last 4 quarters, in terms of sales on our website, we had 3 consecutive record quarters for gold coin demand. And then the quarter that's just gone was our second best ever quarter. So we've never seen anything like this in terms of demand. And I think there's a number of things going on there. One is obviously the gold price, and the momentum in the gold price, but also actually particularly recently silver and platinum. And the other one is capital gains tax. So it wasn't that long ago, a couple of years ago, that the capital gains tax threshold was £12,300. That's come down to £3,000 now, and the rates have also gone up. And UK coins, including the gold, silver, and platinum bullion coins, are classed as legal tender. And because they're legal tender, they're actually exempt from capital gains tax. So we're seeing lots of investors buying gold coins, for example, as a way of getting in on the gold price rally and doing it in a tax efficient way.
Okay, so let's just talk that through again. So that's interesting. So they are buying bullion or coins?
Well, bullion coins. So bullion just relates to the metal and the purity of the metal. So you have bullion bars and you have bullion coins. So bullion
and
coins
they can buy
either
and still be tax efficient.
No, so bars you would have to pay capital gains tax when you sell if you've hit the threshold. It's just coins that are exempt from capital gains tax because they're legal tender.
That is so interesting. So in order to not pay capital gains and to be efficient on their investing, they're buying gold coins. The price of the coins go up. If they sell it, there's no tax on the difference.
That's right. Yeah, and we had a customer who bought gold coins in October. They sold those coins in June, and then I sat on a £70,000 tax-free profit.
Wow, that is very interesting. I don't think many people know that. I've been in the market since beyond 2012, and I didn't know that. I would have thought it would have come under capital gains. Very interesting. Suppose you need to use that as your slogan now for the Royal Mint. Be tax efficient, come buy gold coins. Very interesting. So what's your thoughts in the drivers behind the gold prices?
I think there's lots of things that have been in the news that have driven gold. So tariffs was probably an obvious one earlier in the year, although the impact that that's having now is questionable. So I think some of that was factored in, and there's also, I think, just general confusion about what's going to happen and when, and is it actually going to happen. But that certainly drove some of the prices earlier on in the year. Geopolitics is another big one. So we've got conflicts and trade disputes around the world, and that's contributing to demand for safe haven assets. So gold is traditionally seen as a bit of a safe haven to buy when there's risk off sentiment. Interest rates is another one. So when we're talking about safe havens, people tend to look at gold and they look at government bonds in a very similar lens. Obviously, government bonds will pay you a yield, but that yield tends to come down with the interest rate. So as interest rates are falling, the opportunity cost of holding gold decreases. And actually, if you look at the gold price momentum, you have to weigh those two things up. And as the yield comes down, but the gold price maybe still looks attractive, people are switching out of government bonds and into gold. But there's some longer term trends there actually that I think are really interesting. It does relate, I think, to interest rates, monetary policy, geopolitics, ties all together. And that's central banks. I think in the investment world, we don't really tend to think of what central banks are doing beyond interest rates. But they are buying huge quantities of gold, and they have been doing so for the past 3 years. And some of that seems to be related to sanctions. So when Russia invaded Ukraine, for example, what we saw, particularly in those countries where they're outside the Eurozone, but in Russia's neighborhood, so Poland, the Czech Republic, Hungary, Georgia, those types of countries, they have been buying huge amounts of gold because their currencies took a hit when Russia invaded Ukraine. Equally, as soon as that happened, pretty much sanctions were placed on Russia. And then there are groups of non-aligned countries, or traditionally non-aligned countries anyway, who are buying gold, not because they think that they themselves will be sanctioned, and therefore that those US dollar reserves that they're holding might be a bit more difficult, but because they might want to trade with countries that are sanctioned because they don't necessarily have the same worldview as NATO bloc countries, for example.
Yep.
And it's reached a point now where gold is now the second largest asset held by central banks. So since the inception of the euro, the order had always been US dollars first, euro second, and then kind of everything else. And gold has recently overtaken euros as the kind of second asset of central banks.
That's interesting. I suppose. So a few things on that. I would say we're fairly aware that China was obviously buying up large amounts of gold as well to sort of de-risk to the dollar. I feel like that's where a lot of this spurred from, is from Russia and China, where the initial sort of move into gold was happening. And then off the back of that, where was I going with that? So we're talking about China, Russia, the gold, buying it up. I think as well off the back of that, because usually you said, interesting enough, you said about interest rates, but just being a trader, naturally speaking, when interest rates go down, gold price goes up because people look at it from a point of where you can have your, from my opinion, we're in high interest rates still even now in comparison to where we are, because obviously looking at a broader picture from like the US, they haven't started dropping rates yet. And so I still think there's actually a vast amount of upside to come on gold, because it's usually only in this market when interest rates are low is gold high. And at the moment, interest rates are still high in the US and gold is still high. And we still have obviously the geopolitical tensions with Russia, China. Well, nothing's changed with North Korea. We won't add that in there. But, you've got Israel, Gaza, Middle East. And it seems like it's a vast amount of majority of it. What's interesting as well is the disparity between people now looking at other metals on top of gold, which is also gaining attention.
Yeah, I think that's a really interesting point, actually. So gold was up 27% last year. It's up 29% this year so far. So pretty impressive in terms of price rises. But if you look at silver's up 35% in dollars this year. And the real standout one is actually platinum, which is at 53%. this year.
Yeah.
It's a huge shift in those metals, and some of that is related to what's going on with the gold price and some of those things you just mentioned in terms of China, for example. Because if you think about the platinum market and where demand for platinum comes from, it's not primarily investment. So with
It's
gold,
automobiles, isn't it?
automobiles, yeah, lots of industrial demand. Jewelry as well is a large part. And what we're seeing with platinum is major jewelry markets like China, who tend to buy gold with a little bit of an investment mindset. So they're looking at the value of gold, the price of gold, and seeing it as not just a piece of jewelry, but also something that has some value that they could sell later on. The gold price has risen quite a lot, and I think people, the jewelry consumers in China, are starting to think about, well, is it potentially overvalued, or is there better opportunity elsewhere? And they're switching out of gold and into platinum.
Yeah.
So we're seeing huge amounts of platinum flowing into China, mainly it looks like to satisfy that jewelry demand. And that's also a market where there's structural deficits in the supply versus demand. So we're consuming more than we're digging out the ground. Now there are some above ground stocks, the kind of warehouses of platinum, if you like, but they are depleting, and that's obviously going to push the price up if supply starts to outstrip demand. But what that's also done, interestingly, particularly for people who are interested in investing in physical platinum or even buying platinum jewelry, is it's pushed the lease rate up. Now that's a bit of a strange concept for most kind of people on the retail end of the market, but lots of manufacturers and mints and refiners, instead of buying the metal up front and then taking a price risk and trying to sell it later on down the line when the price has moved, they'll actually lease the metal while it's in their facilities.
Okay.
And we do that at the Royal Mint as well. So we lease the platinum, and then later on down the line, we will make a transaction to buy and sell. So we don't have to sit on the metal and take a price risk.
Yeah.
But because those above ground stocks are depleting, the lease rate has absolutely skyrocketed in the last few weeks, and it's making working with platinum extremely difficult for fabricators. And that means a number of things. It either means that fabricators just supply less platinum products because they can't stomach the cost of it, or it means that they're going to have to start passing that leasing cost on to the end customer.
Yeah.
So neither of which are probably great in terms of retail buying, but it speaks to, I think, the scarcity of platinum in the market at the moment, and the way that the market is moving.
So, from your opinion, I suppose, what's for the next 12 months? What's more exciting for you, gold or platinum or silver?
I think all three are kind of long-term assets to hold, particularly if you hold them in physical form. So if you hold them in physical form, you'll normally have to pay the metal price plus a manufacturing fee, a premium is what it's termed as. And they all move in very different ways. So gold, is driven primarily by geopolitics, by monetary policy, by safe haven demand. Platinum, as we just said, is driven by lots of jewelry demand, but also, if we're thinking about the green energy transition, platinum is really important in producing green hydrogen. So if we start to see hydrogen fuel cell vehicles, then platinum could potentially benefit from that. Or if we start to see actually we're not going to hit the electric vehicle targets that we've set ourselves, and therefore we might need more petrol cars which have catalytic converters containing platinum.
Yeah.
That could also boost the platinum price. And silver's quite similar, actually. So silver has lots of industrial uses, but one of those emerging uses is photovoltaics. So anything really to do with light and energy. So solar panels. So the more demand there is for solar panels, the more demand there is for silver, and that's potentially quite exciting there as well in terms of the silver price. So they've all got some upsides and some potential opportunity. I suppose we should probably weigh that with what are the things that could lead the price to fall. And actually, there's some great research out there on this, and the World Gold Council provides some fantastic information about gold in particular. And they've just done a study of lots of different factors that might cause the gold price to fall. And it's things like, well, what if we get this big outbreak of geopolitical stability and peace around the world? Potentially, then it would reduce the demand for safe haven. But I think people have to think about whether that's likely. What if central banks stop buying, for example? Well, central banks move on very slow cycles in terms of policy. They buy for very, very long periods of time, and then when they sell for long periods of time.
I don't think we're in an environment where politics is going to become any smoother. I think obviously we won't talk too much about politics, but obviously Trump's very aggressive in politics, and there's a lot of tensions around the world. So I don't think we're going to see, everybody being very happy. I also think that there's something that you obviously highlighted some great points of why gold looks good for the future, but I also think something that has not been discussed, and I don't think it's really been discussed by many people, but if we look at the broader scheme of things of how Europe and the UK have just increased their military and defense spending, that's actually a really big thing. We have all of those, like you're saying, electronics and circuits. Obviously, gold is a great conductor. It's used by the military in all of the defense spending through missile guidance systems, radar systems, satellites, you name it. Also coatings as well for gold. And then the same thing for platinum is used as, as you mentioned already, catalysts and things like that. So when it comes to high precision temperatures as well, and they have the sensors for the jet engines, all of that sort of stuff for platinum. And we've just seen obviously the whole of Europe, pretty much, I think it was NATO as well as the UK, say that we will be increasing our defense spending. So you have all of that to come or in the works. And I think that's a side that's not been factored in, because we're obviously dramatically increasing that spend, regardless if it's retail or not. You've now got governments that are putting in their military spending to increase that, and it will add more exposure. I think the Royal Mint needs a new ETF. I think it needs platinum, silver, and gold all in a bundle ETF. That's what it needs, and people can sort of hedge their risk against all three. I think that would be very popular.
Yeah, it's interesting actually. You mentioned defence, because I said that we recycle e-waste at the Royal Mint. So we know, for example, that radios and equipment that is military or that is emergency services will have a higher weighting of gold in those printed circuit boards, because it's much more critical that those don't fail. Whereas if you bought some kind of cheap walkie-talkie, for example, the weight of gold in there would be very, very low compared to a military radio, for example. So
right, so you do have a whole facility just for doing that?
Just for recycling e-waste, from printed circuit boards.
Can the public go and see that or not? Is that still all hidden? I mean, that would be amazing to go and see just how it works and go see the process of how you're stripping out gold, and then I suppose you turn it into jewelry and things like that, right?
Yeah, so we have a visitor centre in South Wales. So we have a visitor centre that talks about all the things that the Royal Mint does, including the jewellery. The factory itself, it's always very difficult, I suppose, to take people around factories. There's lots of kind of hazards. We need to make sure everyone walks on the lines and wears the hard hats and everything else. So we do kind of VIP tours occasionally, where we'll take people around all of the facilities, including the e-waste recycling. But yeah, most people who come to the Royal Mint, they'll look around the exhibition and see all the stuff that we do, but they don't necessarily see firsthand the recycling.
So, I mean, it's pretty incredible, something like that. Like, do you have any stats about it? Like X amount of tons of, rubbish goes in, X amount of gold comes out. Is there anything like that?
It really depends. I said, military and emergency services equipment, for example, will have a higher weighting of gold per ton, and some of the circuit boards might have a lower weighting. It's a relatively new facility for us, so we've been doing it, I think, for the past couple of years now. And a lot of that has been, we built this kind of world's first plant in terms of the chemistry that we use and the processes that we use. So there's been a bit of learning to get it fully up to speed and fully operational, and then improve it. So we're still kind of on that journey. But we work with a Canadian clean tech company called Exia, who
Yeah.
developed this chemistry that strips out the metals from the circuit boards in a chemical process, and it does it at room temperature. So there's not kind of big, blast furnaces or anything that consume huge amounts of energy. We're doing it in a kind of energy efficient way.
Yeah, I think that's really interesting, isn't it? You mentioned about having a digital product in your introduction. Can you tell me a little bit more about that?
Yeah, so it goes by DigiGold as a kind of shorthand, if you like, and there's also a silver and platinum version of it. In a lot of ways, it's a little bit like an ETF, except it doesn't trade on the stock exchange. And instead of owning kind of debt securities, which is the way that ETFs are structured, you're owning the metal itself. You're physically owning that metal. You have direct legal ownership of it. And it's large gold bars or platinum bars or silver bars that are sat in the Royal Mint's vault. And whereas, one large gold bar that you see in the Italian Job or anything like that, that gold bar would be £1 million worth of gold. So not really very obtainable for a lot of people. But we allow you to buy slivers of that gold bar from £25.
Okay.
And 0.001 troy ounces of gold is the kind of increment that you can buy in. So it's really flexible, and you get that full ownership rather than owning a debt security. And what we've seen is huge surges in demand, particularly for silver and platinum, because the silver and the platinum versions of that product are VAT free. So if you were to buy physical silver or physical platinum, have it delivered in coin or bar form, for example, you would have to pay 20% VAT. And that's true in the UK as it is in Europe and lots of other countries. But if you were to buy DigiGold or DigiSilver or DigiPlatinum, you wouldn't have to pay VAT. Gold is VAT exempt anyway. And what we've seen is that the sales of DigiSilver over the last quarter were up 1,158% versus the same quarter the previous year. Platinum is up 798% versus the same quarter last year. So a huge increase in demand, partly because of that VAT-free investing element, and partly because of the shift in investor interest from gold towards silver and platinum as those prices rise. Yeah. Although gold, we're still seeing exceptionally heavy demand there too.
So when you're selling that, let's say I'm buying DigiGold, is there got to be a buyer on the other side then for me to exit?
You're trading with the Royal Mint.
Fine.
So we'll sell it to you and we'll buy it back off you, and it's 24/7 trading through the website.
How are you hedging that difference though in like the value? Are you then selling it onto the market? How would you protect yourself?
It's a little bit complicated in the back end, but essentially yes, we do sell it back onto the market.
Yeah, I was going to say that's if not, you buy it back and buy it back for me. You're coming back through. Very interesting, very interesting. So I suppose, is there anything sort of new in the pipeline for the Royal Mint? I mean, it's been around a long, long time, and obviously a change takes time. Would you say there's any drastic changes or notable changes that have come to the Royal Mint?
I think there's definitely a change in the type of person that we're seeing buying and selling from us. Before the Royal Mint had its bullion website, which was 2014 when we launched that, most of the market in the UK was actually British Asian buyers.
Really?
Yeah, and if you think the relatively small part of the population, but the majority of gold buying in the UK was at retail level anyway was British Asian. So we are now seeing that those customers are coming back into the market. We have products featuring Lakshmi and Ganesh, for example. For Hindu buyers, we have Kaaba bars for Islamic buyers, and they buy not just for the investment, for the value of it, but also there are some traditional reasons or religious reasons that they'll buy gold at certain times of the year as well. Interestingly, we're also seeing a huge increase in the number of women buying from us. So pre-COVID, women made up 10% of our bullion investor base.
Yeah.
and the year just gone, women were 25% of people who are buying bullion. So a huge increase in the number of women. Still lots to go at in terms of making sure that female investors are getting exposure to precious metals, in the right way for them too. But a huge increase there in terms of women buying precious metals, and also younger investors. Actually, when you think of the typical gold buyer, you might think, older man living in the southeast of England or something. But actually, if you think about the generations, when we survey people, either as the Royal Mint or we can do it anonymously, and we always get the same answer. Gen Z and younger millennials are much more pro gold than Gen X and baby boomers tend to be. Now, they're not buying as much at the moment because they're not earning as much by and large, but they're buying smaller products. So they're buying, instead of a 1 ounce gold Britannia, for example, they might buy a 10th ounce gold Britannia. But it's really interesting. I think that bodes well for gold demand and the gold price in future, because I think younger investors who they're into cryptocurrencies and NFTs and it's a very digital world, and yet they value something that's physical and tangible. It's a really interesting dynamic.
Yeah, it's strange. It'd be so nice to see a lot more research into it. It's obviously a lot harder, isn't it? In fact, I mean, why would women go from 10% to 25% in such a short period of time? Why is that? And I mean, it must go back. I think it goes back to people are genuinely concerned about where currencies genuinely are going. I mean, I think if I remember rightly, the British pound is probably one of the oldest currencies that we have, but most currencies don't survive 1,000 years before they're changed. All the likes of the drachmas and everything like that moving over to euro, they don't last. So I find it quite interesting in that sense, because obviously the US debt is dramatically high, and it's a big talking topic in all of the spending bills. And I think Elon Musk has obviously highlighted that a lot further. When we look at that, I think people are genuinely worried about having their money in the dollar, and getting away from that exposure is by going into something like gold. I think people like the idea of crypto, but they don't feel as safe as they do with someone like the Royal Mint having their money in a sliver of a gold bar that's physically stored somewhere. Because I think if you gave people the option and we did a poll, I think if people said would like our currency pegged to gold again, once again, I think people would go for that, because I actually think that's I saw a concept about that not too long ago, about a sort of like a challenger bank wanting to come into the market, and they said that every pound that you deposit with the bank will basically be tied to gold. And I thought, do you know what? I wouldn't be surprised if demand for that really, really excelled, because it's just one of those things where people, I think, are losing a little bit of confidence in governments across the board, really. And we're seeing it more and more now between, parties are split. I mean, Conservative parties virtually disappeared overnight in the UK. The split down the middle in the US between Democrats and Republicans couldn't be fiercer at this moment in time. And I think that there is that solid concern between governments that are running. And I think that's maybe that may be it for the younger audience. I feel like they're more exposed to the social media side of things, of what could happen, what is safe, and maybe that's one of the main driving factors. But yeah, it'd be really interesting to know more about the research behind why they're doing it.
I think there's something interesting you touched on there as well. I think when there is so much uncertainty and people are looking for safe havens, gold has always, performed that role for thousands of years. Gold has performed that role as a safe haven. And if you think right back throughout history, when civilizations in different parts of the world couldn't communicate with each other, they all valued gold. Wherever gold was found, every country, every continent, every civilization, every time period, every world religion, gold is really highly prized and seen as an asset that's to do with security, or about money, or about wealth, or purity, or power. And it almost seems like it's kind of part of the human psyche. It's just really interesting, and it's something that doesn't, it's not going to go away overnight. That suddenly people don't like gold anymore, goes out of fashion, because it's just had that thousands and thousands of years of history.
Have you seen any sort of stats of, like, you're talking about women increasing in purchasing? Have you seen any more stats about sort of that the Gen X and that sort of age category of the percentage increases over the years? Have you seen anything like that?
No, I think it's a little bit early to tell on some of that, I think. But if you think about some of the research that has been done on the differences between men's and women's portfolios, and huge generalization, but there has been some work done. By and large, women tend to not reallocate as often as men do. And actually, women's portfolios often perform better than men's portfolios do for that reason, because they're not constantly in and out of positions and constantly watching the market. And I wonder whether that's part of it. I wonder whether actually, increasingly women are looking at gold as a sensible kind of safe haven option. It's a long-term asset, and it's having that kind of attraction. We're also doing a lot of work though, with organizations like Female Invest and a few others, to make sure that we're kind of getting the message out there about precious metals.
Yeah, I think it's an important factor. Do you feel like over the years the Royal Mint has come out of favour with the public eye? Do you think it's increased with the public eye, as in the sense of you've got record quarters coming in through gold, and obviously that's a good sign for the Royal Mint? Is that driven by just the gold demand, do you think, or do you think the brand of Royal Mint is as strong as it was?
It's interesting. I think we've had some significant royal events. Obviously, we had the Platinum Jubilee, we had the passing of Queen Elizabeth II, we had the coronation, and all of those things. I think at times when people tend to think about coins, because we've got a bit of a tradition in this country of buying commemorative coins for those purposes. And we also had the new definitive coins. So you may or may not have seen some of them in your change, where the designs on the coins have changed with the new king. So they now feature flora and fauna of the UK as the kind of standard designs. So I think all of that kind of definitely helps build the brand, if you like, in people's minds. We've also got some amazing commemorative coins, things that people don't realise that we do sometimes. We've just launched an Iron Maiden coin range, and that's been hugely popular. I think all those things kind of get people thinking about the Royal Mint in a way that they weren't previously, because 10 years ago, when we said the Royal Mint, people just thought of the coins in their pockets, and actually they often thought of banknotes as well. We don't actually produce banknotes, but people thought that we did. And now when you say the Royal Mint, people are more and more thinking about gold, thinking about investment, than they were previously.
Very interesting. Well, it's been very interesting having you on and trying to understand more around the gold prices, the gold market, more about what the Royal Mint are doing. I suppose, have you got any sort of closing remarks or final remarks that you want to bring to light that you think would be important for the listeners?
Interesting question. Yeah. I think that investors are increasingly looking at precious metals to diversify their portfolios, particularly with the uncertainty that we've had. But also, gold's not just a safe haven asset. It's not just a hedge against inflation or a hedge against lower interest rates or currencies. Gold over pretty much any time frame has delivered year on year significant growth. It is a source of returns, and if we've seen lately, particularly with silver and platinum, there is potential there too, and people buying coins can benefit from that capital gains tax exemption and invest in precious metals in a way that's tax efficient, but also in a way that you can enjoy it. You can take delivery of coins and bars and enjoy them in a way that is a bit more difficult with numbers on a screen.
Yeah, I was going to say, actually, would you notice does the gold coins correlate to the same position as the gold market? So for example, where the gold is up 29% on the year, would you say that gold coins are correlating with that percentage increase, or does it lag?
So traditionally, it's depended on which market. So Western markets and Eastern markets have very different buying patterns, or certainly they have done. And I'll touch on why that may have changed. Western markets have tended to chase price momentum. So they'll buy when there's geopolitical uncertainty, when they're worried about the rest of their portfolio, and they're looking for a safe haven. In some of the Asian markets, they're buying a lot more regularly, almost regardless of the price. Or in other markets in Asia, they're very price sensitive. So when they go into a jewelry shop, for example, the guy behind the counter will have an earpiece in with the gold price being fed to him, and you'll buy and sell the jewelry at the live price plus a manufacturing fee. So they're very much more aware of the gold price. And that's tended to help balance demand a little bit. So when the West isn't buying, Asia would buy, and when Asia wasn't buying, the West would buy. But that seems to be changing a little bit. I think we are seeing now lots more regular purchases of gold, particularly in that digigold product, where you can buy £25 a month, for example, and just kind of run that on a direct debit basis.
How do I access that? So if I'm on your site, where am I going to access that?
Yeah, so it's royalmint.com/invest.
Okay, /invest. Yeah.
And then you'll see in the drop-down menu there lots of different options related to the invest. And on the right-hand side, you'll see some of the options about gold and silver bars and some more popular products, and you'll see digigold in that menu there as well. And that'll take you through to the page where you can buy digigold, digital silver, and digital platinum as well.
Interesting. Gonna have to explore that. Have a look at the digigold.
Yeah, increasing numbers of people are. We've got record numbers of customers now. As I said, we've never seen anything like it in terms of demand.
Yeah, and so does it just do the price calculation on the purchase? Does it? So
yeah.
When you
get you put in how much you want to buy. Say it's £100 or £1,000 or £25 or whatever it is, and it'll calculate. Well, for that amount of money, you can buy this amount of gold.
Yeah. So it says £25. Proceed to checkout. Have a look. It's be quite interesting. And then it just calculates it there and then you purchase it. And then if you want to sell it back, you're just clicking sell. Is it nice and straightforward? Is it?
Exactly. You log into your account, click sell. It's 24/7 trading, and you're selling back to the Royal Mint.
Amazing. Well, I really appreciate this time with the Royal Mint. It's been very eye-opening into what you guys have been up to, what you're doing, and arguably, I'd say as well, just how you're staying up with the times. It's been a very, very old organization, and so it's uncommon. I mean, I used to work at Sahor & Co. Private Bank, which was initially a gold merchant that was founded in the 1600s, and seeing how times changes and trying to change the organization is very difficult. But to see something like DigiGold and having that at the Royal Mint just shows that you guys are very forward thinking. It's very interesting to see where it goes. But look, I really appreciate my time with you guys, and I think that the audience have learned a lot, especially about the gold outlook, what's interesting about it, and what's really driving the gold prices. So thank you so much for joining, Stuart. I really appreciate it.
Thank you for having me on.
Yeah, it's been amazing. Thank you.
Thanks.